All right, hi everyone. Welcome to today's webinar brought to you by IronFX. Right, welcome to the live trading session. All right, before I just want to make sure all of you can hear me loud and clear and see my screen as well. All right, before we start, all right, please take note of the risk warning and the disclaimer. Right, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. And so take note that the information in this webinar should not be considered as investment advice or an investment recommendation, but instead just educational material only. Right, my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we've been a finalist for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, we're going to take a quick look at the economic calendar for this week, right? There's quite a few things going on as we wrap up the first week of October, right? We've got unemployment claims and the ISM Services PMI report out later today. And of course, we've got a highly anticipated non-farm payrolls due for release tomorrow, right? So the Bureau of Labor Statistics will be dropping that report where we'll get the latest figures for non-farm payrolls and the unemployment rate for the month of September. Right, so you can see here, today we've got unemployment claims being released at 12:30 p.m. GMT, followed by ISM Services PMI at 2 p.m. GMT. Right, so unemployment claims basically reflect the number of Americans filing for unemployment benefits, right? And the current estimate stands at 222,000. So unemployment claims have been trending lower over the last few weeks, which signals resilience in the US labor market. Remember, rising claims indicates potential weakness in the labor market. Conversely, when we see claims falling lower, right, it indicates some resilience in the state of the labor market. So what we've seen over the last few weeks is unemployment claims continuing to trend lower, indicating some resilience in the state of the labor market. So this week's forecast stands at 222,000, while last week's readings came in at 280,000. So if later today we do see claims coming in lower than the forecast of 222,000, right, this is quite likely going to function as a near-term bullish catalyst for the US dollar. Conversely, if we see claims unexpectedly spike higher, right, that in turn is quite likely going to function as a near-term bearish catalyst for the US dollar. So take note how unemployment claims could inject a little bit of volatility into markets later today. So remember, should claims come in lower than the forecast of 222,000, that's quite likely going to function as a near-term bullish catalyst for the US dollar. And conversely, if the claims come in higher, that's quite likely going to function as a near-term bearish catalyst. Right, we've also got ISM Services PMI out at 2 p.m. GMT with an estimate of 51.7, right? Remember, reading above 50 indicates expansion, so we're seeing pretty decent expansion once more with a reading of 51.7 for the month of September. So once again, if services PMI gives us a very strong result, right? It shows us that the service sector is robust and output continues to expand quite steadily. So this also could function as a near-term bullish catalyst for the US dollar as well. And finally, tomorrow, of course, we've got the highly anticipated non-farm payrolls released by the Bureau of Labor Statistics, along with the unemployment rate. Right, so that's out at 12:30 p.m. GMT on Friday. Right, so we are expected to see unemployment or non-farm payrolls remain relatively or somewhat unchanged. Right, in August, we saw 142,000 jobs being added to payrolls, and for September, markets are expecting 148,000. But what we've seen throughout 2024 is a lot of downward revision for non-farm payrolls for prior months as well. So since April, right, since April, non-farm payrolls have been coming in softer than expected. And at the same time, we see the unemployment rate edge higher from 3.8% to 4.2% as well, all of which are giving us signals that the US labor market is starting to weaken quite steadily, right? So should we see non-farm payrolls miss its estimates while the unemployment rate unexpectedly edges higher, right? This signals further weakness in the state of the US labor market, which in turn is quite likely going to function as a very bearish catalyst for the US dollar. So take note, if we do receive another NFP miss tomorrow, that's accompanied by higher unemployment, right? That's very likely going to function as a strong bearish catalyst for the US dollar, right? Okay, so with that, now let's dive into the charts and trading view and begin the analysis with the dollar index, right? So I'm on the chart for the dollar index now on the daily time frame, and we can see after dropping as low as about 100.17 last Friday on 27th of September, we can see that the dollar index has stabilized and has actually rebounded quite strongly this week, right? So it has bounced off the first support, right? Oops, sorry, this is the first support here, sorry. We go, this first support at 100.21 is a nice like swing low support, right? When you look at the market structure here, there's a nice swing low support currently being formed. And we can also see that the dollar index has actually broken out of, or is attempting to break out of, an overlap resistance at 101.77. Now, why is this an overlap resistance? Right, previously this level functioned as support here on December of last year, and has proceeded now to function as resistance at the beginning of September, then again on the 12th of September. So what was previously a pullback support then functioned as resistance, thus creating a very nice overlap level. So this is an overlap resistance that has been identified as the first resistance here at 101.77. And what we're seeing today is a potential bullish break above this first resistance, right? Now, and especially if we do see unemployment claims come in lower than the forecast of 222,000, while we see ISM services also print another robust set of PMI figures, right? That's quite likely going to cause the dollar index to rise even higher. So this bullish breakout that we are seeing could potentially gain further momentum later today, right? We could get further momentum, or we could get further bullish momentum should we see claims come in lower than the estimate of 222,000, while we see ISM services PMI beat its estimate and come in pretty strong. So take note, there's a couple of fundamental catalysts for the dollar that could cause it to climb even higher later today, right? So what we're seeing now is a potential bullish breakout currently in progress, with the dollar index breaking through the first resistance, which is an overlap resistance at 101.77. Now, we can also run a Fibonacci retracement on this downtrend here, right? We see a nice swing high taking place at the end of June. And of course, with dollar index stabilizing last Thursday and Friday at around 100.18, we see a nice swing low being formed here as well. So now we can run a Fibonacci retracement from this swing high on 28th of June, going down to this swing low here on 27th of September. We can see that the 23.6% retracement has been surpassed. And at the same time, we are seeing the dollar index rise up towards the 38.2% retracement. Now, when I look across close to the 38.2% retracement level, I see another nice overlap resistance, right? And that's at 102.72. Right, so you can see here this level previously functioned as resistance in January. The first 2 weeks of January, it functioned as resistance. Then it proceeded to function as a nice swing low support in mid-March, finding support once more in early August, and briefly finding support as well in mid-August as well. So this creates a nice overlap level, right? That can be identified as a second resistance. So this is a nice overlap resistance at 102.72. And also because we have the 38.2% retracement quite close to it, right? We're going to highlight this as a pretty strong resistance barrier as well. Right, so we can get rid of all the other retracements. We'll just keep 38.2%. So what this second resistance also tells us is that there's a strong resistance barrier, that begins from about 102.43 all the way up to 102.72. So if we do see this bullish momentum extend even further, right, that means we can identify a potential take profit target at around the 38.2% Fibonacci retracement, right? So for long trades, we're going to be identifying potential take profit targets close to a major resistance barrier. So what I see is a major resistance barrier is the 38.2% Fibonacci retracement, the overlap resistance at 102.72, and at the same time, the Ichimoku cloud itself, right? This is a bearish Ichimoku cloud. The cloud itself can also function as an area of strong resistance. So you have three factors that have contributed in the identification of a strong resistance barrier at around the 38.2% Fibonacci retracement, right? So once again, the 38.2% retracement, the overlap resistance at 102.72, and the Ichimoku cloud itself have all combined to identify or to highlight a potential strong resistance barrier, which can be used in the identification of a potential price target for any long trades that you may have for the dollar index, right? And also take note of the data, upcoming data later today, right? Unemployment claims and ISM services PMI report, both of which could function as a potential bullish catalyst for the dollar index, right? Okay, now let's move on over to the 4-hour time frame and see if we can fine tune the analysis. Right, we can see here the cloud has also turned on the 4-hour time frame. We can see the cloud has transitioned into a bullish Ichimoku cloud, highlighting the current bullish momentum on the 4-hour time frame. Right, and price is attempting to break, and the index is attempting to break above its first resistance at 101.77. So what we're seeing is a potential bullish breakout currently in progress. And if we do see this index continue to rise higher, and if you're long on dollar index, right, identifying your take profit target from 102.40 to about 102.70 would be a good area to do so. Right, so if dollar index is rising strongly today, then of course that means the currency pair like the euro and pound are all falling sharply as well. So let's take a look at the euro first. Right, when you look at the euro, we see it make a nice double top here. First of which making on 26th of August, and then on 24th of September. There's a nice multi-swing high resistance here. Right, there's a nice multi-swing high resistance at about 1.1189. Right, with the euro falling sharply, right, and the cloud green being green in color, right, bullish Ichimoku cloud. The bullish Ichimoku cloud itself can function as an area of support, and at the same time, I see a nice swing low taking place here on 11th of September, which can be used in identification of the first support. Right, so this first support can be used as a potential price target, right? So if you have been shorting the euro, right, you can see the euro this week has been very weak. If you've been shorting the euro this week, identifying your potential take profit target at around the first support, which is at 1.1011 would be a suitable area to do so. So this is a pretty strong support area that's identified by the bullish Ichimoku cloud itself, and the swing low support at 1.1011. Now, on this nice uptrend here, we can also run the Fibonacci retracement from this swing low on the 1st of August going up to this swing high here on the 23rd of August. Right, we can, when we pull up all the fibs, we can see that the 50% retracement sits slightly below it here. So this is a pretty strong resistance barrier, pretty strong support barrier as well. So we'll just keep 50 and 61%. There we go. Right. When I zoom out a little bit here, when I look across to try and identify the first resistance for the euro, when I look across this price level here at 1.1111, I see a nice overlap as well, right? When I highlight it like this, you should be able to spot it as well. And I'm going to be using it in the identification of the first resistance. You can see here that this level at 1.1112 previously functioned as support on 22nd of August, after which it proceeded to function as resistance on 5th of September, then support again on 17th of September, and also support once more on the 24th of September. So this creates a nice overlap level that we can use in the identification of the first resistance. So the first resistance at 1.1112 is an overlap resistance. And of course, this multi-swing high resistance that we identified at 1.1189 is quite naturally going to be our second resistance here. Now, what about second support? Right, what about second support? Actually, when I look across this price level here at about 1.0952, I see another nice overlap level, right? You can see that here previously, this level functioned as a nice swing high resistance in mid-March, another swing high resistance here in mid-July, resistance once more on 6th of August, and then functioning as support on 15th of August. So then this creates a nice overlap level, which we can use in the identification of the second support. And it also, we can see here, this overlap level also has the presence of a 61.8% Fibonacci retracement slightly below it, right? So highlighting another strong support zone over here. Right, so these are the key levels for the euro on a 4-hour time frame, right? And take note, with demand for the dollar looking strong, right? With demand for the dollar looking strong, the euro is quite likely going to fall even lower. And if you have been shorting the euro from the beginning of this week or perhaps even today, right? Identifying your take profit level at around the first support, which is at 1.1011, is a suitable area to do so, because this is a pretty strong support level. There is a swing low taking place here on 12th of September. We also have the bullish Ichimoku cloud, and we have a 50% retracement, all three elements identifying a potentially strong support area. So support areas can be used as potential price targets for any short positions. Right, okay, so these are the key levels for the euro on the daily time frame. Let's move on down to the 4-hour time frame and see if there's a need to fine-tune the analysis. Right, so for now, no, I think this is pretty fine. And you can see here, right, this is a nice swing low support that occurred on 12th of September. The euro looks to have stabilized just slightly above this level for now, maybe about 20 pips above this level for now, right? So take note, it's coming very close to a major support area, and we could potentially see the euro stall. But remember, we've also got fundamental data coming out today, right? We have a couple of fundamental catalysts for the US dollar. So if we do see unemployment claims and ISM services report both functioning as a potential bullish catalyst for the US dollar, so that means we are quite likely to see the euro continue to fall even lower. So take note, the bias for the euro could be to the downside, right? Especially if we see the data later today continue to provide as a continue to function as a bullish catalyst for the US dollar, right? So we are quite potentially we could see the euro fall even lower today, right? And if it does fall lower, right, we can use the 50, we can use the combination, this zone here, which is the first support at 1.1011 and the 50% retracement, which is at 1.0989 as a potential take profit target for the short trade. And of course, if the euro continues to slide even lower, if it continues to drop even lower, we can then use the second support, which is at 1.0949 to identify a second take profit target for any short trades that we may have, right? These are the key levels here for the euro on the 4-hour time frame and also on the daily time frame as well. Right, now let's take a look at gold, right? Let's take a look at gold and then we'll look at oil as well. And of course, should you have any requests for any other instrument, please do drop them in the chat box, right? I'll be more than happy to go through the analysis with you, right? Do not wait till the end of the session to drop your request in. Do drop them in early so we have time to go through the analysis together. Yep. All right, so now let's take a look at the commodities, starting with gold, right? XAU USD is the instrument that tracks spot gold futures. And we can see gold has been in a very significant uptrend, bullish uptrend since October of 2023, right? When you look at it on a daily time frame, it's been in a strong bullish uptrend, and especially since the beginning of this year, or rather since mid-February of 2024, gold has been in a strong bullish uptrend, making a new intraday all-time high on Thursday, 26th of September, right? So this intraday all-time high was formed on 26th of September last week at $2,685.51 per ounce. So this is quite clearly the first major resistance uh for XAU USDs for spot gold, right? So this is how we've identified the first major resistance. And I think okay, for this case, I'm just going to capture it with the body of the candle and highlight this wick as such. Right, okay. Now, in such a scenario, right, when gold is trading close to its intraday all-time high, how could we possibly identify the next major resistance barrier? Remember, we don't have any other prior swing high resistances or pullback resistance that we can use or that we can reference to identify another resistance barrier. So in such a scenario, we have to rely on Fibonacci tools such as Fibonacci projections and Fibonacci extensions. So let's try that out as well. All right, hi Cleon. All right, great. Good to see the request come in. Right, okay, we'll cover Bitcoin as well. Once we're done with the commodities, we'll move on over to Bitcoin. All right, great. Great to see the request come in. Okay, now for this, right, how could we possibly identify the next resistance barrier? Right, perhaps we can go down to the 4-hour time frame here. When we go down into the 4-hour time frame, we can try and run a Fibonacci retracement, right, from this intraday all-time high on 26th of September, going down to the swing low on the 30th of September. We're going to run this retracement to help us identify potential extension levels. Remember, we use a Fibonacci retracement to help us identify the extension levels at 127% and 161%. These are the key Fibonacci extension levels at 127.2% and 161.8%. So we can see here, right, on the 4-hour time frame, Then the 127% extension sits at $2,702, and the 161% extension sits at $2,723. We can use these extension levels to help us identify the next potential resistance barrier. So first resistance is close to the intraday all-time high, that's at $2,672 per ounce, and the second resistance can be identified at $2,702. And of course, should gold move higher, right? Maybe next week, if gold should move higher over the next few days or next week, right? Then of course we can then use the Fibonacci extension at 161% as the next potential resistance barrier, right? But for now, 137% is more than sufficient to identify the second resistance here. Now, with spot gold prices pulling back, right, on the 4-hour time frame towards the swing low here, right? You can see spot gold has made a nice swing low on 30th of September, beginning of the week on Monday, at around $2,630 per ounce. So this is a nice swing low support that also has the presence of the bullish Ichimoku cloud. Remember, the cloud itself can also function as a nice support as well. So we can see it's actually, right, when I stretch it across here, it's more like a nice overlap level, right? We see a nice overlap level here at $2,631 per ounce. Right, so this is how we've identified the first support. Is actually a nice overlap support at $2,631. Now, with this uptrend here, right, on the 4-hour time frame, I see a nice uptrend beginning on 4th of September to the intraday high on the 26th. We can also run a Fibonacci retracement starting from here, of course, 4th of September to the intraday high on 26th of September. We can see, right, when we've drawn the Fibonacci retracement, we can see that this trend line here, the blue dotted line, has captured the market structure pretty well. And we can see that 23% is quite close to the overlap support here, and this is where exactly gold has found support last week, or rather found support at the beginning of the week. Right, so not only is it a nice overlap support at $2,631, we also have the presence of a 23.6% retracement, identifying another nice support area. Or sorry, rather adding significance to the strength of this support area, right? The 23.6% Fibonacci retracement adds further significance to the strength of this support area. Right, and looking a little bit below, right? How could we identify the next support level? What I do see is a pretty decent pullback level here, right? This level here at around 2,589 previously functioned as resistance, right? We can see gold running the resistance here on 16th of September and then again on 19th of September. So this was a resistance barrier which now can potentially function as support. So we can identify 2,589 as the second support. And at the same time, I also see the 50% retracement underneath it, adding further significance to the strength of the support area. So for this analysis here, we're going to keep, for this Fibonacci retracement, we're going to be keeping 23 and 50%. Now, of course, with spot gold prices falling quite strongly today, right? If dollar index is rising strongly, typically is going to cause gold prices to fall. Remember, the dollar and gold typically share an inverse correlation. So that means when dollar is rising, gold is falling. And conversely, when dollar is falling, gold is rising. Right? But do take note, in some instances, right, we can also see these two asset classes share a positive correlation as well. But that's not happening at the present moment. What we are seeing is negative correlation, and as dollar rises, we are seeing gold prices pull back as well. So if you have shorted gold, right, if you have already shorted gold, right, identifying a potential take profit target at around the 23.6% Fibonacci retracement is a suitable area to do so, right? Because we have three elements that help us identify a strong support area, right? We have the bullish Ichimoku cloud itself. We have the overlap support at $2,631. And of course, we have the 23.6% Fibonacci retracement, right? So all three contributing to the identification of a strong support zone, which can be used in the as a potential price target, take profit target for any short trades that you may have for spot gold here. Right, so these are the key levels for gold on the 4-hour time frame, as well as on the daily time frame as well. You can see it on the daily time frame as well, a very strong bullish uptrend. And actually, if you look at it since last Thursday, right, gold is actually just trading sideways. If you look at it here, it is much more clearer on the 4-hour time frame, right? since last, I would say since last Tuesday, right? Gold has actually just been trading sideways between, right, between $2,630 on the lower bound and approximately about 2,670 on the upper bound, as we're experiencing sideways trading here. And it looks like this could continue for the rest of the week, right? As we come to the end of this of the first week of October, it's quite likely gold is going to range between these two levels as well, and maybe it's going to settle close to around the first support by the end of this week. Right, so take note, we're seeing sideways trading action for the gold. There's no clear bullish momentum at the present moment, more of a consolidation period for gold over here, right? Consolidating approximately between $2,630 on the lower bound and about $2,670 on the upper bound here. Right, okay, now let's look at crude oil, right? WTI is the instrument here that tracks WTI crude oil futures, of course. And when we look at it on the daily time frame, we can see crude prices are trading in a very strong bearish downtrend, right? We see a series of higher lows, series of lower highs and lower lows. We also see the WTI continuing to trade underneath the descending trend line, as well as continuing to trade underneath the bearish Ichimoku cloud as well, all highlighting or rather all emphasizing the current bearish momentum. Now, crude prices have spiked recently as well, right? Combination of announcement of economic stimulus packages out of China last week, and also escalating geopolitical conflicts in the Middle East, all of which have contributed to crude prices spiking higher this week. But as it spiked higher, it's also approaching a very significant resistance barrier. Remember, we have the bearish Ichimoku cloud, we have a descending trend line, and what I see here, we also have a strong overlap resistance as well at $73. So previously, this level functioned as a nice swing low support on 4th of June, and then another swing low support once more on the 7th of August, and the third swing low support on the 22nd of August. So this level at $73 previously functioned as a significant multi-swing low support, which then proceeded to function as resistance last week on Tuesday, 24th of September. So when it functioned as resistance here, it then created a very significant overlap level. So this is actually an overlap resistance at $73.05. Now, not only is this a strong overlap level, it also has the presence of a 61.8% Fibonacci retracement. So this retracement was found by running a retracement from here, this swing high on the 26th of August, going down to the swing low here on the 10th of September. We can see that the 61.8% retracement aligns pretty close to the overlap resistance at $73.05. Right, so we have four factors that are contributing to the identification of a very strong resistance barrier, right? We see the descending trend line, the 61.8% Fibonacci retracement, and the overlap resistance all intersecting at around $73. And at the same time, we have the fourth element, which is the bearish Ichimoku cloud itself, uh, acting as an additional overhead resistance as well. So take note, despite uh, all the uh, bullish catalysts for crude prices, right, it is approaching a very significant resistance barrier, and it could potentially stall out around this level as well. So if you've been long on crude oil, right, if you've been long on crude oil, identifying your take profit target at around the first resistance, which is at $73 per barrel, is a suitable area to do so, because this is going to be significant tests for crude prices. And of course, if we do see prices continue to break higher, if it does make a strong break above this first resistance, that's quite likely going to see a strong shift in momentum. Right? But for now, the momentum does still remain on the downside, despite seeing a nice spike in crude prices today. Now, if the first resistance is here at $73 per barrel, where could be this next potential resistance barrier? I see a nice little pullback taking place here on Thursday, 29th of August at around $76.70. This is a level that we can identify as a second resistance for crude oil. And of course, the second support for crude oil, right, is simply going to be this swing low that occurred here on Tuesday, 10th of September. And these are the key levels on the daily time frame. Let's switch on over to the 4-hour time frame and see if there's a need to fine-tune the analysis. Right, so looking at WTI oil on the 4-hour time frame, right? think we can see this is pretty much a very strong resistance barrier, as I mentioned earlier. Perhaps the first support here can be may have a Fibonacci retracement that we could use as well, but I think maybe it's not so necessary. That's fine, I think. But yeah, okay, we don't need to fine tune the levels, right? It's pretty much it's very much appropriate for the 4-hour time frame as well. So take note, this level here, this resistance barrier here at $73 is indeed a very significant uh, overhead resistance, and this is where you can identify a good take profit target for any long trades. You can see here crude oil, WTI all running the resistance here last week as well, Tuesday 24th of September, and running the resistance yesterday as well, Wednesday 2nd of October once more, right? So you can see this level has indeed functioned as a strong resistance barrier to any further upward movement. So if crude oil does continue to rise higher, right, identifying a take profit target around this level is a good suitable area to do so. All right, now let's move on over to Bitcoin. Right, there's a request by Cleon as well to take a look at Bitcoin. So let's take a look at that. So of course, we'll start off on the daily time frame. And if you look at it, Bitcoin has sort of approximately ranged. There's quite a wide range, of course, right? No doubt this is quite a wide range, but it's approximately range between $54,000 on the lower bound and about $68,000 on the upper bound since July as well, right? There's been wild swings within this channel here, right? This is wild swings between this channel, but we can see that it is sort of continuing to trade sideways, right? We're not seeing any strong bullish momentum as what we saw in the beginning of the year, right? We can see here from the end of January till mid-March, very strong bullish uptrend, similar to here as well from mid-October till mid-Jan, very nice bullish uptrend as well. But for now, price looks to be consolidating within a pretty wide range, of course, and it's just trading sideways, right? If you look at it on the bigger picture, Bitcoin is actually just been trading sideways between a very wide range, of course. That's between $54,000 on the lower bound and about 69,000 on upper bound. Right, now that we've seen that we've identified these bounds as well, we can also identify a major support levels as well, right? See here, this is going to be a potentially a strong support level here at 53,550. You can also see this is going to be a potential resistance here at $68,000. And also we can see that this level here, this swing high resistance that took place over the weekend, right? That took place over the weekend at 65,000 is also another resistance barrier. And also I see a nice little pullback taking place here on 17th of September. This level here can also be used as a potential support area as well. Right, so you can see here we're looking for significant swing highs, swing lows to identify major resistance and support levels. Right, so that means, of course, this first swing high resistance at $65,000, $65,781 can be identified as the first resistance. And this level here at 68,364 is a multi-swing high resistance. We can identify this as the second resistance. The first support, of course, is at 58,212. It's a nice pullback level here. We can label this as the first support. And this level here at 53,550 is a very significant multi-swing low supports. We see three very significant swing lows taking place, right? The first of which took place in July, second taking place in August, early August, and the third taking place in early September, right? So from early July, early September, and in early July, early August, and early September, we have seen three significant swing lows take place off this level here. So of course, we can identify this level here or label this level as the second support. Now, on this nice uptrend here, right, I see a nice uptrend beginning from early September till the end of September, right? We can also run the Fibonacci retracement from this swing low, 6th of September, going up to this swing high here on the 27th of September. I believe the 61.8% retracement should be aligning pretty well with the first support. Yep, there we go. So this is indeed going to quite likely going to function as a very strong support. So not only is it a nice pullback level, it is also accompanied by a Fibonacci retracement at 61.8%. Now, so that means, right, if you've been shorting Bitcoin, right, especially since the beginning of the week, if you have been shorting Bitcoin from what, $65,000, right, looking at it here, this is a pretty strong support level, right, that you can use in the identification of a price target and slightly higher as well, right? I see another like intermediate support level at around the 50%, right? If you look at it here, there's a nice pullback support level that's currently being tested, right? This nice pullback support level that's currently being tested, and that's at around 60,688. See here, this level here on Friday, 13th of September, previously functioned as resistance. It now can potentially function as support, which is what seems to be happening over the last couple of days. We have seen Bitcoin stabilize at this pullback support level here. Okay, the 50% is not close. Actually, it's more likely to be the 38. No, it's not even 38. It's neither one of them. Okay, that's fine. So what we see here is Bitcoin consolidating or finding or stabilizing rather, not consolidating, stabilizing at around this pullback support level at 60,655. So if we do see Bitcoin break below this level here, then we can of course then target the first support at 58,212 as the next potential take profit target for any short trades here. Right, so these are the key levels for Bitcoin on the daily time frame. Now let's move on over to the 4-hour time frame. Right, so we can see not much to adjust here, right? You can see it's sort of stabilizing around this pullback level at 60,655, and of course a clean break above this level here, and then we can target the first support as the next potential take profit target for any short trades. And at the same time, we can also, right, if I were to just highlight the bullish channel, right, Bitcoin was trading in a bullish channel before breaking out, right? You can see here since 6th of September on the 4-hour time frame, we can see a nice bullish channel for Bitcoin, which was finally broken on Monday, right? At the beginning of the week. On Monday, 30th of September, we see a bearish breakout take place through the bullish channel, signaling a potential bearish reversal. And at the same time, we also saw Bitcoin break through the bullish Ichimoku cloud as well, right? Highlighting further bearish momentum. Right? The first trigger came, or the first signal rather, came from Bitcoin breaking out of this bullish channel here. This is a nice bullish channel on the 4-hour time frame. This gives us the first hint that we may have a potential bearish reversal. And the second hint is when price breaks through the bullish Ichimoku cloud, signaling further downside action as well. Right? And also, of course, we can see on the 4-hour time frame, the cloud transitioning from green to red, highlighting the bearish momentum or the strength of the bearish momentum. Right, so these are key levels for Bitcoin on the 4-hour time frame as well as on the daily time frame. Right, okay, and then let's move on over to the indices. Right, let's move on over to the indices. Let's look at Germany 40. This is the instrument that tracks the DAX futures, and then we'll take a look at US 500 as well. So looking at Germany 40, right, we can see that it has made an intraday high at 19,500 on Friday, 27th of September. So last Friday, it made a new intraday all-time high at 19,500. And this is a level that can be used as the first in identification of the first resistance here, right? The first resistance for Germany 40 is at 19,500. And we can see that price seems to have reacted off a support level. Why do I say that? Because when I look across at 18,970, we can see that this level previously functioned as a strong swing high resistance at the beginning of September, functioning as resistance once more on 19th of September, and then resistance again on the 24th of September. And today, it looks like it has bounced off this level quite nicely, thus creating a nice overlap level. So the first support at 18,972 is actually a nice overlap support. And we can see there's a nice uptrend here as well that began on 10th of September. So we can also run a Fibonacci retracement from this low, 10th of September, going up to the intraday high on 27th of September. I believe this might be the 38% retracement. And we can see not only this is a nice overlap support now, it also has the presence of a 38.2% Fibonacci retracement. Right, I'm going to be keeping the 38 and 61% retracement levels. because I'm going to be using the 61.8 to help us identify the second support. And when I look across this level here, which is at 18,683, right? This is also a nice pullback support level. You can see Germany 40 finding support here from 16th of September till the 23rd of September, finding nice support here before bouncing higher, right? So this is a nice pullback support level that's also accompanied by the 61.8% Fibonacci retracement, a pretty strong support zone here. Now, looking at this longer uptrend that began from 5th of August, right? There's also, I believe, a chance to identify a pretty decent bullish channel, right? We see a nice bullish channel for Germany 40, which is currently being tested as well. You can see Germany 40 falling towards the first support and the 38.2% retracement, breaking slightly underneath the bullish channel as well. So for now, this level does seem to be holding, but take note, a clean break below the first support is quite likely to trigger further downside action, and we are likely to see a shift of momentum. Right now, it's currently on a strong bullish uptrend here, but a clean break below 38.2%. And the first support, of course, is going to quite likely going to see further selling pressures for Germany 40, right? And if that were to happen, right, then we can target the second support as a potential target for any short trades. But what we're seeing now, we're actually seeing Germany 40 actually bounce off the first support. So maybe perhaps we're going to see a slight bullish reversal as well, right? There's potential bullish reversal on hand as well. Right now, looking at the 4 hour time frame, let's try and fine tune the analysis. Okay, wait, before that, sorry. If the intraday high is the first resistance, how can we possibly identify the next second resistance? In such a scenario, we're going to rely on Fibonacci tools. Again, right, so we're going to first start with a projection, starting from point 1, 5th of August, going up to point 2, 3rd of September, and ending at point 3 on 10th of September. Key projection levels sit at 61.8%, 78.6%, and 100%. Of course, 61 has been surpassed, so let's get rid of that. We don't need that, but we can keep 78.6% and 100% projection levels. Now, we can also run a Fibonacci retracement on this downtrend here from 3rd of September down to 10th of September. We can try and identify potential extension levels, and we can see that 161% extension level actually aligns very well with the first resistance. So let's just keep that one on. Okay, so these are the key levels here. So we can use the Fibonacci projection at 78.6% in the identification of the second resistance for Germany 40. Right, now let's look at it on the 4 hour time frame, and let's see if there's a need to fine tune the analysis. Right, okay, so we look at it on the 4 hour time frame, we can see not only is the 38.2% retracement and the overlap support at 18,972, we also see the bullish Ichimoku cloud as well. So on the 4 hour time frame, the bullish Ichimoku cloud is also functioning as a strong support zone along with the 38.2% retracement and the overlap support at 18,972. So perhaps we are going to see Germany 40 bounce higher today, right? Perhaps you can see Germany 40 bounce higher as it reacts off a strong support zone. So it looks like it's reacting on a strong support zone. And I think I would like to see it like break up out of this descending trend line as well, right? So we have a potential bullish bounce. I would say that I think the bias looks to be more for potential bullish bounce for Germany 40, especially if you can break out of this descending trend line on the 4 hour time frame here. Right, it's a pretty decent descending trend line that could be taken out. So we see a strong support zone identified by 38.2% retracement and overlap support at 18,972 and the bullish Ichimoku cloud on the 4 hour time frame, right? All contributing to a potential bullish bounce for this instrument. Right, and if that bullish bounce were to take place, of course, we can then target the first resistance as a potential take profit target. And at the same time, we can also try and identify an intermediate take profit target at between the 50 and 61.8% retracement levels as well. This is another barrier here that can be used in the identification of a potential take profit target. So if we do see this bullish breakout take place, right, if this bullish bounce materializes and Germany 40 breaks out of this descending trend line, the first take profit target can be identified within this zone that's identified by the 50 and 61.8% Fibonacci retracement. And of course, if it continues to rise higher, we can then use the first resistance at 19,500 as the next potential price target. All right, so these are the key levels for Germany 40 on the 4-hour time frame and daily time frame. Let's move on over to US 500 now. Right, before we move on to US 500, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the analysis with US 500. Right, great to see the feedback come in, right? Truly appreciate it. Thanks, everyone. I'll just keep the poll running for another 10 seconds or so. Right, great. I think there's most of you who have answered, right? All right, great. Truly appreciate it. Thanks so much. Right, now we can continue with the analysis on US 500. All right, okay, here we go. So looking at US 500, right, it's made an intraday high, all-time high on Thursday, 26th of September, and that's at 5,773. Right, so we can identify this as this region here as the first resistance. And of course, we can see that it has broken out of this level here. This level was previously a strong swing high resistance that occurred on 16th of July. That's at 5,667. It also functioned as resistance on 2nd of September and now looks to be functioning as support. Right? You can see yesterday as well, US 500 bouncing off this level, and today again looks to have found support once more. So this is a nice pullback support level that can be identified as the first support at 5,667. Right? Because we also see a nice uptrend here. We can also run a Fibonacci retracement from this swing low on 6th of September going up to the intraday all-time high on 26th. Let's pull up all the fibs. We can see that the 23.6% retracement also sits quite close to where the first support resides. Then I'm trying to identify the second support. I see another nice overlap, and that's at around 5,551. You can see previously US 500 running to resistance on 31st of July, then finding support on 22nd of August, and then on 29th of August. So this creates a nice overlap level that we can use in the identification of the second support. And also this level here also has the presence of a 61.8% retracement just underneath it. So we're going to be keeping 23 and 61.8%. No worries, let's just do 61 and then do 23.6% here. Yep. Right, and in such a scenario, of course, right, with the first resistance close to the intraday all-time high, once again, we're going to be relying on Fibonacci tools to help us identify the second resistance level. So let's first start with a retracement, because we're going to be using this retracement here from 3rd of September down to 6th of September to identify potential extension levels. And we can see that 161% sits at 5,822 and 127% has already been exceeded. So let's just keep 161%. Now we can also use a Fibonacci projection starting from here. This swing low on 0.1, 5th of August, going up to 0.2 here on 3rd of September, and ending at 0.3, which is on 6th of September. Right, when we look at all the projection levels, we can see that once again, 78.6% aligned very close to the extension at 161%. This creates a nice overlap, and this creates a Fibonacci confluence. Fibonacci confluence simply means we have more than one Fibonacci level at a particular price point or at a particular price zone. Right, so let's just keep 78.6% and 100%. And we can identify this zone as the next resistance barrier here. The second resistance can be identified at around 5,828. Right, that's identified by this Fibonacci confluence here. Now, should we see uh, US 500 stabilize around the first support and reverse the bounce higher, right? If we do see price hold this level and bounce higher, we can then use, of course, the first resistance at 5,751 as a potential take profit target for any long trades. Okay, now let's move on down to the 4-hour time frame and see if we can fine tune the analysis. Right, it looks pretty good for now, right? Whatever we've identified on the daily time frame is more than applicable on the 4-hour time frame. What I would do is probably is to move this first resistance here to the top of the candles here. So on the 4-hour time frame, some minor adjustment is needed for the first resistance, but otherwise this is fine, right? You can see US 500 does seem to have stabilized at around the 23.6% retracement and the first support, and we may see a potential bullish bounce take place. Right, so if this bullish bounce takes place, right, we can then target the first resistance as a potential price target. And of course, I would also like to see it break out of this descending trend line, right? There's a pretty good descending trend line on the 4-hour time frame for US 500. So if it does break above this, right, then definitely we have a higher conviction that this bounce is quite likely to make further progress, right? If we do see a nice break above the descending trend line, then the potential bullish bounce is likely to have more momentum, and perhaps it can rise up all the way towards the first resistance at 5,767. All right, okay, as we approach the end of today's webinar, right, are there any further requests, right? We still have time for one more request, so if you do have one, please do drop it in the chat box, right? If there are no further requests, then yeah, I would say just look out for uh, the calendar for Thursday and Friday, right? Remember, we've got unemployment claims coming up today at 12:30 p.m. GMT, followed by ISM services PMI at 2 p.m. Right? If both of these data uh, function as a potential bullish catalyst, right? That means we have claims coming in lower than 222,000, while ISM services PMI comes in at about 51.7 or perhaps higher. Then these two results could then function as a strong potential bullish catalyst for the dollar. So we can expect dollar index to climb higher, while currency pairs such as the euro, pound, Aussie, and Kiwi are all likely to fall, and gold prices are also likely to fall as well. And take note, tomorrow, Friday, 12:30 p.m. GMT, we have the non-farm payrolls, right? And the unemployment rate being released by the BLS, right? So the Bureau of Labor Statistics will be releasing non-farm payrolls and unemployment rate, and we've seen non-farm payrolls actually slow down very significantly over the last 4 to 5 months. And if we do see another NFP miss accompanied by higher unemployment, that's quite likely going to function as a strong bearish catalyst for the dollar. But however, if we do see the unemployment rate remain unchanged, while we see non-farm payrolls match the forecast of 148,000 or perhaps maybe surprise a little bit to the upside, then we could potentially see a near-term bullish catalyst as well. Regardless of the outcome, right, non-farm payrolls are very, or rather an extreme volatile news event release for markets, right? So take note, it's better to wait for the results to be released, then quickly form and quickly get an understanding of how the data could function, whether the data is going to function as a bullish catalyst or bearish catalyst, and then perform our technical analysis, and then try to capitalize on the momentum after. Remember, non-farm payrolls is extremely volatile, and I would recommend for you to wait for data to be released, see what is the outcome of the jobs figures and the unemployment rate, and then perform technical analysis to capture and ride the momentum, right? All right, okay, so that's all I've got for today, right? Thanks everyone for tuning in to today's session brought to you by IronFX. Do look out for all upcoming webinars for the next week as well. And I wish you all the best in your trading journey. And of course, as we come close to the end of the week, have a great weekend as well. All right, thanks everyone. Take care. Have a great trading week and enjoy your weekend as well.